I'd like to introduce our keynote speaker for the evening, Harry Alford. So a four-time founder, Harry has experience leading sales and business development engagements, innovation consulting, investing, and exiting a e-commerce startup. In addition to being a Techstars mentor and blogging about Bitcoin and decentralized finance for the past 5 years, Harry is an adjunct professor at the University of Maryland, where he supports and develops minority students interested in entrepreneurship. Harry holds a BA from the University of Maryland, an MA from Georgetown University, and an MBA from Babson College. He currently resides in Washington, D.C. Today, Harry is a business development manager for Coinbase, where he is helping to continue to make Coinbase the safest, most secure place to buy and sell your cryptocurrencies. So it is a great pleasure. I introduce Harry. And Harry, thank you so much for speaking and sharing your knowledge this evening. Really excited about this talk today.
Well, thank you so much for the opportunity to be here and speak with the San Diego Tech Hub. It's an honor and a pleasure. So thank you so much. I'm humbled.
Awesome, man. Well, I appreciate you giving back. Now, before I turn it over to you, man, I have one question. As part of your bio, I heard you were dubbed the Bitcoin Bull. Can you tell us a little bit about how you got that nickname and what that's all about?
Well, CNBC found one of my blogs and I thought that they were spamming me. They reached out and I'm like, this can't be real. It was a Friday morning and I Googled the producer that was reaching out. It turned out she was legit. I hopped on a call with them. They were like, hey, we're really interested in hearing a different perspective on Bitcoin. Would you like to come in and speak? And so I said, yeah, sure, sounds great. And they're like, all right, come in Monday morning and speak at 10 a.m. And I'm like, oh, okay, wow, that's very quick. And then at this point, Friday through Sunday, like Bitcoin was on a tear. And then I get on Monday morning and Bitcoin completely tanked. It pulled back like 20 or 30%. And the headline on the screen, it says Bitcoin tanks, and then, but also right next to it says Harry Alford Bitcoin Bull, and so every one of my friends was watching it that day, and so Bitcoin Bull has just stuck, and it's also just kind of funny because they had me on with Bitcoin tanked, and but yeah. Awesome,
I love it, man. Thanks for sharing that. All right, well, the shows are yours, my friend.
Excellent. Well, I'll share my screen. Great. So thank you everyone for coming tonight. I've been really pumped, really eager, looking forward to this ever since Claude invited me to speak. And so tonight we're going to be talking about the Bitcoin technological revolution. But first, just to specify my role at Coinbase, it is as business development manager for Bison Trails, which is a blockchain infrastructure platform as a service provider. It's a standalone product line as part of Coinbase. I'm focused on leading sales and business development efforts for key protocols and engagements with major financial institutions, funds, exchanges, and custodians. And just to tell you a little bit about, specifically about the infrastructure. It's enterprise infrastructure to power the crypto ecosystem. We provide a suite of easy to use infrastructure products and services on multiple blockchains. Our mission is to advance the crypto ecosystem with secure and reliable infrastructure. As I mentioned, we're a standalone product line at Coinbase, and we continue to support our customers, some of the most respected names in crypto and financial technology. We power staking for enterprises and token holders. We make it easy to run nodes, secure networks, vote, and earn rewards. We're also powering applications that use blockchain data for developers. We make it easy to build products that interact with blockchain securely and reliably, such as enterprise security, multi-cloud, multi-region. We're geographically distributed, and we provide blockchain indexers, a global blockchain sync, just to name a few. So getting into today, the reason we've all come here today is to talk about Bitcoin. And so as all of you have probably been following along, Bitcoin has reached over $1 trillion in market cap. One Bitcoin is hovering just under $60,000. And we want to know today, like, what does the future hold for this crypto asset powerhouse? Where will we be in 5 years, 10 years? How much will it be worth? What would the adoption look like? How many different group segments and industries will this crypto asset touch? That's something that we're going to be delving into. It's something that I'm also personally pretty curious about too. And looking at just the arc of innovation over different decades, there have been 5 technological revolutions: the Industrial Revolution, Age of Steam, Age of Steel, Electricity and Heavy Engineering, Age of Oil, Automobiles, Mass Production, and the Age of Information and Telecommunications. Today, Bitcoin and blockchain protocols enable a more decentralized financial world, taking what used to be highly complicated transactions and distilling them down to simple clicks. What makes this period we're living in so fascinating is the combination of both technology and financial structure. And so, with that being said, I ask, is Bitcoin the 6th technological revolution? And if so, which phase are we witnessing? That's the question that we are going to be exploring together tonight. So the agenda for tonight: 1, we're going to be going over dynamics of bubbles and golden ages. We're going to actually look at what blockchain is and get into a little exploration exercise. Then we're going to talk about the Bitcoin technological revolution, and then what's next. Technological revolutions and financial capital. So technological revolutions and financial capital, the dynamics of bubbles and golden ages, is a very popular book by the famed Carlotta Perez, which was published in 2003. It described the connection between technological development and financial bubbles as seen in the emergence of long-term technological trends. She believes that the deployment of enormous wealth creating potential brought forth by each technological revolution requires an adequate social institutional framework. And the framework, where both financial and production capital plays crucial roles, is carried out in recurring sequence for every 50 years by new entrepreneurs, risk takers, and financial tycoons, some of which are probably on this call tonight. So a technological revolution can be defined as a powerful and highly visible cluster of new and dynamic technologies, products, and industries capable of bringing an upheaval in the whole fabric of the economy and of propelling a long-term upsurge of development, according to Carlotta Perez. There are 2 periods in which this technological revolution transpires, each lasting about 3 decades. And you can see here from this diagram, it starts with the gestation, and then it moves into a big bang where eruption happens. This commences the installation period, where you see creative destruction, new paradigm versus old paradigm, financial capital leads, and there's also bubble creation. And then it moves into the frenzy part of the installation, right before a collapse occurs, and there's a turning point. What the turning point could be many things, some of which we will talk about later in this presentation. After the turning point, it moves into deployment, which begins with the synergy and then towards maturity 20 to 30 years down the road, leading to another big bang. And in the deployment, we look at what we witness is creative construction, widespread application of a new paradigm, and production capital leads. And then so on, the next revolution begins after that. So let's look at each period and the phases that encompass each period a little bit more intimately. So the installation period is when it's when new technologies erupt in a maturing economy, when the previous paradigm begins to confront the limits to its potential. This period is ushered in with a big bang, advancing like a bulldozer, disrupting the established fabric and spreading new ways of doing things. So 2 phases within the installation period. There's an intense funding of innovation. There are clusters that start to form of new revolutionary inventions. New industries are established and construction of new infrastructure begins. And as I talk through this, just think about your own worlds and your own lives and your industries and what you're being able to see, especially over the past year of this new normal, what is COVID. Then there is a frenzy phase. Increased speculation and financialization leads to a decoupling between financial capital and production capital. The capital is invested in more financial innovations than in technological innovations. Asset bubbles are inflated. And then there is the turning point from installation to the deployment period. And it's a crucial crossroads, which usually means a serious recession involving a recomposition of the whole system. This consists of 2 phrases. The first, synergy. We see growing inequality and political unrest, a need for political regulation of the financial sector. Asset bubbles may burst. The link between financial capital and production capital is repaired. Then you move into the maturity phase. The market for new technology begins to become saturated. Social structure and infrastructure have adapted to new technologies. Opportunities for investment are decreasing. The idle financial capital is moving to new sectors and new regions. And so, as I mentioned earlier, with the cycle that Perez has been talking about, there's historical patterns that you start to see. And we've seen this from all the other past revolutions that we all know so much about, such as the Industrial Revolution, which started in 1771. And then it led to a panic of 1797, and then there was a turning point before the deployment and maturity in 1825. The second one was age of steam and railways, and that started in 1829, hit a turning point around 1848, and then matured in 1873, leading into the age of steel, electricity, and heavy engineering. This began in 1875. It saw the Great Depression, and then Argentina bearing, and then in 1893, there was another turning point. 1903, it saw rich man's panic, and maturing in 1920. The fourth revolution was the age of oil, automobiles, and mass production, which began in 1908. It saw US stock mania around 1929. 1930s and World War II were the turning point. And then it saw the oil crisis in 1974 before maturing and moving into the fifth technological revolution, which, as Perez believes, is the age of information and telecommunications. There was a big bang in 1971, followed by an oil crisis in 1974, moving into the collapse of the second world NASDAQ, and then there was a turning point, another crash. But now, where are we now? Each evolution, as I mentioned, begins with a financial bubble, and that propels the rapid installation of the new technology. This table really shows that a big bang followed by recovery, and then a long period of productive growth as new technology is deployed throughout other industries, society, and peripheral countries. Think about where you are in the snapshot in history, what you're working on, what you're seeing, what you're hearing, and think about where we are right now. Are we in the midst of the sixth technological revolution? And when you see Bitcoin's installation period? I'm personally not quite sure, as it hasn't reached a turning point where painful processes of implosion mark the end of a frenzy phase. I do believe it satisfies several characteristics of the installation period, however, that Perez mentioned in her framework. There is a highly visible attractor, a big bang, symbolizing new potential and capable of gathering a cluster of pioneers, entrepreneurs, innovators, risk takers, investors. There's resistance from its predecessor, There's an induction of a paradigm shift. There are noticeably a lot of investors out there. One of them, um, really famed investor whose book is on my shelf, he keeps talking about paradigm shift in a lot of his blog posts without coming out and blatantly say the word Bitcoin. But he keeps talking about paradigm shifts. And I think a lot of people are noticing that there is one. Some other signifiers are, it makes it easier for others to follow suit, such as consumers. The mutual influence between technology and politics, how they kind of like blends and informs each other. It's hard to tell the difference. Surges of development, the disdain of old assets, financial capital becomes highly innovative. But first, let's take a look at the technology behind Bitcoin. So what is blockchain? Blockchain is a distributed ledger that is immutable, secure, and decentralized across computers all over the world. The blockchain represents a network consists of transactions and records anything of value, such as titles of ownership, certificates, and money. The technology is faster than traditional methods, has lower costs, and removes friction between parties. Additionally, by circumventing middlemen or intermediaries, people can own their own privacy, create and exchange their own value, and be compensated for their work. Some of you might be familiar with third parties or middlemen. Like if you're buying a house, when I was buying my house, it felt like there were so many different people stealing money from me. There was a fee I had to pay here, a fee I had to pay there. Some people I'd never even met before. And it just felt like robbery to me. And I call that rent-seeking behavior. People that are trying to just steal value from you without giving any in return. Also, blockchain and Bitcoin and other types of crypto assets, they rely on cryptography. So cryptographic methods to maintain security and fidelity that trace back to fundamentals all the way back to World War II. So this isn't just a new thing. It's been worked on, iterated, and matured over decades with very smart people working on it. There's been a shift from the internet of information to the internet of value. Since Tim Berners-Lee created the World Wide Web in 1989, the internet has enabled businesses and people to share information in almost unimaginable ways. However, in today's internet of information, you can't store or transact value without a powerful intermediary. Intermediaries like banks or governments are slow, threaten privacy, and exclude large groups of people they can't profit from. There's an estimated 2 billion working age adults that have no access to the types of formal financial services delivered by regulated financial institutions. We call these groups of people the unbanked. Trust, transparency, and anonymity has never been needed more than now. Blockchain's peer-to-peer platform will work for people in ways the internet never could. It's actually an engine for inclusion. As Mark Andreessen, co-founder and general partner of A16Z said, this is it. This is the thing we've been waiting for. The distributed trust network the internet always needed and never had. And so blockchain is, a lot of people refer to it as trustless. It removes bias, it removes humans from the equation. It's just, it's an algorithm that computers solve the answers for. And so that's a really big value prop for using blockchain. As the book, Blockchain Revolution, How the Technology Behind Bitcoin is Changing Money, Business, and the World, the authors said, we believe that the economy works best when it works for everyone. And this new platform is an engine for inclusion. It drastically lowers the cost of transmitting such funds as remittances. It significantly lowers the barrier to having a bank account, obtaining credit, and investing. And it supports entrepreneurship and participation in global trade. It catalyzes distributed capitalism, not just redistributed capitalism. And so it's borderless. You think about carrying gold across the border. If you had a lot of gold, it's pretty tough to do that. And it's pretty tough to do that without being noticed. Also, if you're sending money back home, remittances, if you've ever done that before, use Western Union or any of that type, it takes forever. And also there are crazy fees with it. And so with both of those examples, blockchain can fix this. Blockchain makes it cheap, affordable. It's fast. It's almost the transaction, and it settles almost instantaneously. It's people say anonymous, but pseudonymous, and so you're able to send money without having banks or countries seize it, or censor it. And so there's a lot of ways and a lot of value proposition that people see in blockchain and utilizing this. There are a lot of enterprises that are tinkering with blockchain and have been for some time through innovation, through building their own types of projects and pilots inside of the organization, a lot through acquisition, acquiring blockchain and fintech startups for their talent or for the tech. There's also a lot of open innovation. So bringing in external ideas, running pilots, hackathons, other types of incubation and accelerator activities to really just try to, test it out, see if it applies to what they're working on, but also learning. There's a lot about the beginner's mindset when it comes to blockchain. Just having an open mind, being curious. Will this work for us? Is what's the opportunity cost? What are the current alternatives and substitutions for this? And so at the time of this ecosystem map, what you can see is laid out by the corporations, the startups, protocols, platforms, consortiums. There's a lot of activity. But also at the same time, the Forrester Research Group estimated that 90% of blockchain experiments will never be a part of a company's operations. And so just like within a lot of big organizations, there could be innovation theater, but I think when it comes down to it, there's a lot of FOMO too. A lot of corporations and people do not want to be missing out, and they want to be able to participate in potentially the next technological revolution. And so there is a great tool that some doctors came up with. And so it's a good way to really find out if blockchain is an appropriate tool for your business needs. So it's called Blockchain Beyond the Hype Decision Tree. And the authors of this framework include the Chief Data Officer from Deutsche Bank, co-director for Imperial College Center for Cryptocurrency Research, project head for blockchain and distributed ledger technology at the World Economic Forum, and founding partner for Radion Partners. And so this little decision tree has 11 questions that will help you make a quick initial assessment of whether blockchain is the right solution for the problem that you're facing or your company is facing. And so I think that this will be a great opportunity just to explore this yourself and get yourself a little bit more familiar with blockchain and its use cases potentially for your organization. And so we're just going to send you into, this is a meetup after all. You're all probably isolated. Maybe some of you are in your basement like I am right now. And I want you to be able to work through this, but also introduce yourself to someone else and maybe bounce some ideas off of them too. And so we're going to send you into breakout rooms right now to discuss these 11 questions to decide if blockchain is right for your business, where the blockchain is an appropriate solution for a defined problem, maybe that you're working on. So for about 20 minutes, you're going to be in those rooms, and then we'll call you back in a little bit. All right. See you in there.
Hello, Peter. Can you hear me?
Yes, hello. I was wondering what happened.
Yeah,
What happened to the meeting?
the meeting is in progress. Just right now, we have a breakout room session, which is for like 5 more minutes, about 5 to 10.
Is this currently a breakout room?
This is not. You are in the main lobby. I'm
Okay.
just administrating the event, so just trying to help everyone in need. And I just see you joined, and I just wanted to explain real quick that the meeting is not over, it's still running, but people will join back like in a few minutes, coming back from the breakout rooms. I'm happy to put you into one of them so you can just talk with a few people.
Yeah, sure.
All right. I'm trying to assign to. There are some nice people in room 6. See you later. Hello, Steve. Hello, Steve. Can you hear me? I'm not sure if you can.
How long the meeting goes to?
I believe it's like 20 more minutes. I'm in like 2 minutes, we'll close the breakout rooms.
Hey, hello, everyone.
Hello.
And so how did that go for everyone? And I'm sorry, I apologize. I forgot to drop the link in before we broke out.
It's a challenge to solve.
Yeah. But did you all figure it out? Were you able to get the link?
Yes,
Yeah.
we were.
So I reached 2 points of friction in the workflow with respects to Gary and payments he's needs. So if we have a chance to talk about that, we'd definitely like to.
Yeah.
That's awesome. Very cool. Very cool. What were the points of friction?
I'll go through the decision tree and then let Gary uproot the pain points. But we made it all the way from this. We obviously started from the start. And then we reached a gray area at point C. Can you create a permanent it's a little bit blurry, but keep me honest. Can you create a permanent authoritative record of the digital asset in question? And we reached a gray area there where I believe Gary can expand on that. That was a hybrid situation that he was in.
Correct. It's we're building a traditional system and a blockchain system for different purposes. Our blockchain will be a clearinghouse similar to ACH that started in 1974, or the old clearinghouse the banks all owned from the 1850s. So we'll have that that'll be on blockchain. We're going to have other transaction activities such as our payment network will be on a more traditional system. We don't use Visa, we don't use MasterCard, we have a whole new payment network. So we're going to drive up to 90% of the costs out of merchant fees and do it all through our system outside of the traditional network. So consumers will be able to have bank accounts with us, they'll be able to make payments in a new financial system that is very safe. It's going to be as safe as a bank. So I'm building it, I've built banks. I came at this from the banking side, and we're building this as a bank outside of the current system. And that's what we're working on right now.
And that sounds like a technological revolution to me, a new financial system.
This is my third motion. The first occurred in 1994 when I pioneered internet banking as president of La Jolla Bank. We had to go to the UCSD Supercomputer Center to find a server to put it in. Then I created Bank of Internet, which is now known as Axos Bank, in 2000. And this is the third rung on the chain, and that's going from a very basic challenger bank, then a neobank in today's jargon. And then today we want to create a whole new system. So it's a big movement. And we will use blockchain. We have to use everything. In fact, I didn't think blockchain was possible at all until I think it was 6 to 9 months ago when JP Morgan spun off a division that has a faster processing blockchain.
Yeah.
So that was a critical factor for us. It brought me back into that side of the game because we were having to do all the work outside of that. And when that came about, bang, we came back and finished out the pieces. And the clearinghouse is a huge feature that we have, and it'll be available for other people as well.
Well, make sure to let San Diego Tech Hub and all your peers and everyone else here know, and keep us in the loop on everything, because it takes partners, takes relationships, and
yes.
Even though it's in blockchain, it's still network driven. Still have to talk to people.
Oh yeah. We have a product that's for the unbanked that's text based, but our main product is retail store based. We're going to build a payment network off of retail stores apps.
Great. Well, please drop your information in the chat so I and everyone else can be able to follow up with you.
Glad to do it. Glad to do it.
So I'm glad that you were all able to access this, and also looks like we're pretty productive. I know our group was, and we were learning more about one person's education venture. And so going through each of these, it helped me get a lens into that world about how this could be applied in different use cases in education. And so I love this exercise. It's really great. It's really thought provoking. And most of these, as you'll see, it's hard to make it all the way to the end. And so blockchain doesn't have a use case for everything, at least not right now. Okay,
Yeah.
so moving into the Bitcoin technological revolution. So blockchain has become synonymous with Bitcoin. Investor Travis Kling best defines Bitcoin as a non-sovereign, hard-capped supply, global, immutable, decentralized digital store of value. Bitcoin is also a censorship-resistant hedge against inflation and the most significant monetary experiment in human history. Founded by Satoshi Nakamoto in 2009, Bitcoin is the world's first crypto asset. Bitcoin is stored and exchanged securely on the internet through a digital ledger called a blockchain, which we all just went over. Each block contains a cryptographic hash of the previous block, a timestamp, and transaction data. It's divisible into smaller units known as Satoshis. So invented initially to be electronic cash, which was stated in Satoshi's white paper in 2008, Bitcoin has become an attractive investment and a store of value often compared to gold, sometimes referred as gold 2.0 or digital gold. Bitcoin has the world's largest market cap compared to other crypto assets. So $1 trillion, which it just hit that mark this year, 2021. Owning Bitcoin is advantageous for many reasons, including its decentralization, lower fees than other traditional online payment methods, and especially the removal of bias, which I mentioned earlier. So if we are in the sixth technological revolution, which I'm fairly certain we are, which phase are we in? And so some have spoken with certainty that Bitcoin and blockchain will be a technological revolution. I believe that we are in the frenzy phase of this installation period. Few have pinpointed the exact timeline of these phases, and as it's hard to really see in real time, sometimes you have to connect the dots looking backwards. Sometimes it's in the rear view. So to have it play out in real time and to know exactly where we are, it's very difficult to do. Fred Wilson, the co-founder of the famed Union Square Ventures, hypothesized this paradigm on his blog in 2015. He said, "I'm not going to guess if we've seen the collapse phase of Bitcoin technological revolution, or if we are in it, or if it is coming. But if Bitcoin and blockchain is going to be a meaningful technological revolution, and I think it will be, that we are going to move from the installation phase to the deployment phase at some point, and there will be a major financial breakpoint that happens along the way." He's not the only one that's talking about this. Chris Berdisky, partner at Placeholder VC, a crypto VC fund, he explains where we are in his YouTube talk titled Expectations versus Reality. He said, "We are in the frenzy. 2017 kicked off the frenzy of crypto, where financial reality will increasingly divorce from the underlying utility. The expectation premium will be the greatest in the market. And so, in the coming years, we'll enter the second bull market of the frenzy. The expectation is going to outpace reality, while the financial fervor may be just as fierce. In the next crypto bubble, it's unlikely that tech will be where the web was in 2000. And so this is his diagram over here. The web bubble burst at 4.4 trillion in 2000. And he says what makes the Bitcoin technological revolution so unique is that we are tinkering with both the technology and the financial structure. this combo of innovation is going to be explosive. We're not just tinkering with technology or just with financial structure, we're tinkering with both. And so where he believes that we are, it starts with the Big Bang, which is the Bitcoin launch when the first block was mined in 2009. Think about what also was happening around that time. That was also during the financial crisis, Occupy Wall Street. That was one of the big reasons why people galvanized around Bitcoin, and Satoshi, wrote the Bitcoin white paper. And then, so that goes through the eruption. And so remember, installation, this is like about infrastructure. You're building here, you're building, you're trying to get things off the ground and try to get use cases, try to demonstrate some traction. And then in 2017, there was kind of like a bubble. There was ICOs, initial coin offerings, where a lot of people were coming out of the woodwork, writing white papers and then asking for money for products and protocols that weren't even built yet. And so the crypto markets hit 830 billion. It was crazy times. And so right now where we are is in this frenzy area. And in the coming years, we'll enter the second bull market of the frenzy. And so what is that turning point? Are we in the turning point? Have we hit the turning point yet? It's hard to say, but given the backdrop of COVID and what we've seen in the macro environment, some might think that we are actually in this turning point right now. And so how do we know when we're approaching the second half of this Bitcoin technological revolution? There is massive exposure to the masses giving Bitcoin attention and adoption, and much needed political momentum. Regulators and politicians even acknowledge that innovation can't be killed. When the whole fabric of the economy is rewoven, reshaped by Bitcoin's modernizing power, and the US government deeming Bitcoin mining as critical infrastructure, that's when we will know when we are moving into the second half. And as you see from this screenshot on the right, this is from 2 days ago. Kentucky governor signed tax breaks for crypto miners into law. And so he's incentivizing Bitcoin miners to come to Kentucky because he's essentially saying that it is good for the economy, but also because of the energy types of renewable energy that's going to be used to really drive, and also the energy that is being wasted could actually be turned into mining Bitcoin. And so in a way, he is deeming Bitcoin mining as critical infrastructure, at least for his state. And so we're going to start to see other states probably follow the same direction. So another way to know that we are heading into the second half is entrepreneurs have had to build and facilitate their fundraising mechanisms. In December 2017, as I mentioned, the price of Bitcoin peaked at roughly $20,000, which was a lot back then, on the rise of ICOs. Blockchain startups had tremendous access to capital from non-traditional investors, to VCs and corporates. ICOs took a major hit in 2018. It had even been declared dead. So Bitcoin had been declared dead. There is a great website that links to every different article that talks about Bitcoin is dead. And so it continues to evolve, and also regulation continues to evolve too. In 2019, Blockstack, the Blockstack's token sale became the first SEC qualified offering in US history. And so at each corner, with Bitcoin and blockchain was supposed to be dead, it continues to just move forward. Even financial institutions are transitioning from skeptics to advocates. And so in the image to the right, in the left column, you will see a statement from this organization, and then you'll see what they said today. And so on the left, top left, says Bitcoin's real value could be zero, Morgan Stanley analyst says. And then they say in March 17, 2021, Morgan Stanley becomes the first big US bank to offer its wealthy clients access to Bitcoin funds. On the left, Bitcoin is a fraud that will blow up, says JP Morgan boss. To today, on the right, JP Morgan says investors can make Bitcoin 1% of portfolios. And then you go down to the bottom and you start to see it's not just banks. These are enterprises now. Bitcoin is useless as a payment mechanism and ridiculous as a store of value, ex-PayPal CEO said. Today, PayPal's entry to crypto followed long buildup and expertise. They just announced today some major developments are going to allow customers now to actually transact and pay in Bitcoin, Ethereum, and Litecoin. One of the biggest on-ramps in finance, in fintech, PayPal, is going to be enabling the world to be able to use cryptocurrency and assets to transact. Then there's also Visa. Visa CEO, we won't process transactions in Bitcoin because it's not a payment system. To today, Visa is working to enable Bitcoin purchases, CEO. And Visa just yesterday announced a major partnership and allowing consumers through their credit cards to pay in USDC, which is a stable coin. So you see the transition shifting from skeptics, to believers, advocates, and champions. Another way to know is you look at recessive situations. And so as decoupling occurs in the frenzy phase and investment flows into new areas during a turning point, regulatory changes will be made to facilitate the deployment period. Soon there will be a time of reckoning within the next decade when we as a society will be faced with a difficult recessive situation. And so I think it could be up for debate about what we're seeing, trillions of stimulus, COVID, a lot of people are out of work, industries are decimated, and we also see the M1 money supply just shoot up. And you could look at this graph, and so it starts in 1960, and then it slowly it shot up over the years, the decades, starts to get up around 2000, and then all of a sudden in 2020 it shoots up, and then you see a little shaded part. It's shaded yellow to the right, and so now it's in 2021. And U.S., according to this graph and to Fred, the U.S. recessions are shaded. The most recent end date is undecided, and so it's just shaded yellow, and it's still shaded. If you go to it today, if you just click, go to this website, fred.stlouisfed.org, and it's still shaded. So it's still an indicator that we are in a recessive situation here. So what's next? Where do I see Bitcoin going from here, and why the crypto asset will go higher? Here are just some reasons. The US dollar is losing at least 2% in value each year with the current inflation rate. Institutions and corporate buyers are adopting Bitcoin as a potential global store of value and inflation hedge. Someone in our group mentioned Tesla earlier. Tesla, MicroStrategy, and Square have collectively bought more than $3.9 billion worth of Bitcoin alone. That is massive. And just earlier last year, who could have saw that company? And now it's just like Bitcoin is inevitable, at least to a few. Wall Street and tech will be enticed by Bitcoin's liquidity and price discovery, especially their clients, the big banks of Wall Street. And Bitcoin's monetary network will inform many industries, enterprises, and group segments in one way or another. It's not unreasonable to see Bitcoin soar to $100,000 in 2021. In fact, JP Morgan predicts it's going to hit 146,000 price target this year. Tokenization and DeFi acceleration will strengthen the case for Bitcoin adoption. According to Blockstream's Samson Moe, the Bitcoin blockchain network now transfers almost $900,000 every second globally without banks. So I think there's probably I think you see the reason why banks are starting to pay attention and get into the game. They see either, this everything's their whole industry is going to get cannibalized, or they can try to figure a way to participate in this and monetize in some way. Tokenization, which is issuing Bitcoin to represent real tradable assets digitally, will disrupt industries and turn the world into investors by giving all people access to the last decade's best performing asset class. Investors will participate in protocols, earning rewards, while strengthening the decentralized ecosystem. More investment and attention will flow into enterprise node infrastructure, blockchain data, and staking. DeFi, decentralized finance, will be more widely accepted as a new financial system, and it will replace the old one, as our friends were saying earlier. There'll be a constant supply of skin in the game. So here are just some examples of use cases that we're seeing out there today. Lolly, a startup, it rewards Bitcoin to consumers who shop at their favorite online stores. Lolly has turned the casual shopper into a passive investor. So if you plug in their extension into your Chrome and you shop at one of their partner retailers, like I don't know, IKEA or something like that, you make a purchase, it gives you, instead of giving you like dollars or credits and rewards, it rewards you in Bitcoin. And so it by buying some piece of furniture, you get Bitcoin, you are now kind of, an investor. You have skin in the game. And it's kind of like you can decide your intrinsic value for yourself now that you are passively investing in Bitcoin. It makes it really easy too. It's really good for mass adoption. There's a lot of technical friction and barriers for even to participate and for people to wrap their heads around. So Lolly is kind of making it easier. Strike, Russell Okung became the first NFL player to be paid in Bitcoin. Strike utilizes Bitcoin's open monetary network to convert paychecks into Bitcoin. And so the Strike founder, a guy named Jack Mahler, he talks about Bitcoin is two things. It's a network and it's also an asset. And they can both be utilized together to make a really powerful, proposition why you should be using it and how it could be leveraged to your advantage. And so Russell Okung is one of the first pro players to be paid in Bitcoin. His contract, I think he's having half of it, like maybe $13 million or something. He's gonna be paid in Bitcoin. So think about that. And a lot of people are accepting Bitcoin for work at a discount of whatever the US price it would be, because Bitcoin is going to be appreciating. It has limited supply, but unlimited demand. Whereas with US dollars, it's getting devalued every day by how much money is being printed by the Fed, by Jerome Powell. NBA star Spencer Dinwiddie, who worked to tokenize his NBA contract in 2019, invested in Flow blockchain. Via Flow, Warner Music Group, Dr. Seuss Entertainment, and UFC can enable fans to buy, sell, and trade digital collectibles. And so you are seeing a lot right now. You may have seen with NFTs, with Top Shot, where you can buy NFT is a non-fungible token, essentially like a digital version of a sports card, a piece of art, anything that can be traded digitally. And so you may have seen stuff around Top Shot where you could buy NBA moments of people dunking or dribbling, stuff like that. That is from the same company behind Flow blockchain and also CryptoKitties. It's a company called Dapper Labs. And they're making, I think they've brought in over 150 million in sales since launching Top Shot. It's a pretty incredible use case and people adopting blockchain. Some of them, they don't even need to understand it. They just know they love NBA and they want to have this collectible. And then lastly, you see crypto artist Beeple, which received $53 million of proceeds for his record-breaking NFT. And he was paid in Ethereum, a cryptocurrency. And so Beeple is an artist. He's been around for a long time. I personally have never heard of him, but he makes really good digital art. And he made a collage of thousands of his pieces of art together and put it up for auction. And he received $53 million in Ethereum. And it's a record. And obviously, Christie's auction, all these other types of art houses, auction houses are getting in on this too. So you might, where we saw with the ICO bubble in 2017, some are saying that NFT craze right now might be a bubble that bursts as well. And so this new financial system will be more vast than we've ever seen, merging crypto with the web. We can learn a lot about dynamic bubbles and coded ages through Perez's framework. Additionally, it provides a good deal of insights into how to identify recurring sequences and historical patterns, which is especially advantageous for those providing production and financial capital, which are the people on this call, entrepreneurs and investors. The Bitcoin technological revolution will open up more financial products to average individuals, transforming the entire sector in the process and bringing us into the deployment period. That concludes my presentation, and we could open it up to questions or just share comments or suggestions, but I also want to let you know where you can find me. I am pretty active on Twitter. So that is my handle there, Harry Alford 3. You could also follow me at that same handle on medium.com. That's where I blog regularly. And then there's also my email. And so I'll do my best to respond to email. I get a lot, but like I'm sure most of you guys do too. So, but feel free to follow me on Twitter. That's definitely the best place and probably the fastest where I'll respond to. And so thank you very much. And so I'll open it up or also turn it over to Claude too. I know we're short on time, or right on time actually.
Yeah, we definitely have some some time for questions. And for me, and we'll open it up to the group and whoever wants to unmute themselves and ask. But I do have a question, man. My wife has been asking about investing in cryptocurrency, and I said, oh, I have a Robinhood account. They trade a few, but is there a place to where you can go? I mean, it's what, close to 6,000. I don't have $6,000 just to kind of buy one Bitcoin, but the whole concept of where can I go if I'm interested in investing in any cryptocurrency, and given the price, is there fractional shares that I can buy and kind of going through that. Can you just kind of explain a little bit, for those investors that might kind of get their feet wet?
Yeah, so I think it is, I think one of the best places, of course, I'm going to say it's Coinbase. We've really harped on making things easy for everyone. And also that's the first place where I buy Bitcoin. And because I was trying to get on to every exchange at this time. And there was a whole lot of friction. There's a lot of KYC, know your customer and anti-money laundering types of checks. You had to put in your passport picture, your driver's license, all that type of stuff. This was years ago. And then there was also a holding pattern. You had to wait. And then I came across Coinbase. It did all those things, but it was just fast, like lightning fast. And so the UI UX was just phenomenal for me. And so I recommend Coinbase. I always have. And it's a really great interface, but also because you could go on there, you could buy a lot of the currencies on there, and assets are they don't have thousands of cryptocurrencies like other types of exchanges might have. Coinbase might have hundreds. And so I really like that. And so I would recommend that, but also because I could custody it myself. So I like to say buy, store, earn. And so I like to buy through there and either custody on there or take it off into my hard wallet. Where if you do it on Robinhood, you don't really hold it. And if it's not your keys, it's not your Bitcoin. And so you're some may say you're buying synthetic Bitcoin if you're doing it through a place like Robinhood. And so you want to be able to custody it and hold it, or you are paying someone to do that for you, to put it in cold storage and protect it for you. For some people, it keeps people up at night if you have a ton of Bitcoin and it's on like a hard drive type of thing, and you lose your keys like once a month. Like, you might not want to be holding on to your Bitcoin. You might want someone professional to do that for you. But I recommend Coinbase for retail investors for sure, and also other types of investors.
Thanks, man.
Long story short.
Yeah, can I say one thing about that as well?
Yeah.
Yeah, we were talking about Coinbase, and I really appreciate your talk. And I have to say, another thing I liked about Coinbase is that there's opportunities that they offer for up and coming coins to learn about them and gain some coins in those.
Coinbase
and
Earn.
To me, yeah, Coinbase Earn. And to me, as I've never really personally been into stock investing. I mean, I love reading about companies and learning about it. And I really think that a smart investor looks at all of those things. And to me, as more of a tech-centric person, getting outside of the blue chip fund, essentially, like it's really awesome to see all of the coins and their story and what they're providing as value through Coinbase, and using that as an exploration tool, and then investing small amounts and just seeing where things go over time is kind of where I'm sitting. So, you know, it helped me get over that that initial like hump of like, oh, should I try this? You know, should I not? And now I'm just like, oh, there's a lot of really cool ones. I was talking about Numeria is a really cool one. Algo coin, is that what it is?
Algorand.
The Algorand, like, and it's just like, the other thing I will say that after using it for 3 months now, you said like, you know, there's hundreds of coins. Even this past week, they've added like 10 coins, you know, and it's like, oh, wow, this is way too much information for me at once. But, you know, it's going to be a fun journey just to, again, making small investments, just learning about the technology through investing, and to kind of see where where that's going. If I could just interject with a question, if that's okay. I just wanted to know your thoughts as being somebody who's been working at Coinbase, and, you know, what is the talent pool looking like looking ahead from both the technological Bitcoin, or not Bitcoin, but cryptocurrency software engineers, whatever we want to call them, we'll call them software engineers, and both that and the tech and banking entrepreneurs that are in that ecosystem. Do you think that there's a gap in quality candidates to be dealing with the surge of demand of this, you know, wave that you talk about?
Yeah, well, I can't speak on behalf of Coinbase because we are announced that we're going to be going public, and so I can't share a lot of details around that. But I think in general with the ecosystem, I think this is a once in a generation moment where people are really going to start coming in droves into the crypto space. I think there's a lot of problems we're solving, and I think a lot of people are viewing this. It has the same user adoption right now, crypto does, to when the internet was just getting off the ground, except it's moving at a way faster clip. And when you see companies like an Amazon, that a lot of people were just like, what is this? Like, this is a company to sell books online. Oftentimes innovation is not priced in. And so I think that there are a lot of savvy investors out there that see where this can go potentially, which is, you know, to the moon. It could just be endless. But I still think that there's a lot of investors that just don't get it, and they still think that this is a blip. But from a lot of conversations I've had today, just with people that have been texting me, friends, they're like, hey, like, I just applied here, I just applied there, like, what's your advice? Like, it's insane right now. And so I think the industry is going to be attracting a lot of smart people, a lot of people from a lot of different backgrounds that could apply a lot of their acquired career capital and skills to this space. And I think it's going to be great. I think the future is looking really bright.
Okay.
Thank you for your question, Benjamin.
Yeah, I just wanted to make that, because I know that another thing about San Diego Tech Hub is, you know, fostering and mentoring new people and into different parts of the ecosystem. So I always find that an important question to ask.
It was a great question.
Yeah, definitely. What are the skill sets as we start seeing, cryptocurrency on the rise? What are the right types of things that maybe we can help educate, our community on to be more productive in that workforce?
Claude, there's going to be community marketing. It's not just like technical fields either. It's like I'm in business development. I'm coming from innovation consulting, investing, launch my own startups, and so it's going to take a village. And I think it also needs to be inclusive of different backgrounds, diversities, experiences, world perspectives. Because if we're not all building in this together, then a lot of groups are going to be excluded from this down the road. And so I think it's important to have a lot of different minds and voices involved. And I think the San Diego Tech Hub can be a really great driver of that.
Awesome. Thanks for that, Harry. Hey, Mark, I know that you had a question, man. You want to kind of run through that?
Yeah, hey, thanks for the presentation, by the way, definitely informative. This is more a spitball and speculation kind of deal. And I really want to just get right to it. Do you think with the way it's working as cryptocurrency as a whole, this is irrespective of Bitcoin, just cryptocurrency as a whole, do you think one day it could just be its own standalone, or is it always going to need a frame of reference back to fiat currency? I say this on the likes of what Claude just said. We have an emotional attachment to seeing one Bitcoin being worth under $60,000. Could you see cryptocurrency just being a standalone currency altogether? I guess I'm looking at this from a lot of different levels, because cryptocurrency is being defined not by a country, but by the people. It erases borders. There are no international borders. And then when you see how how cryptocurrency and blockchain are being used in other global problems, like stabilizing Latin American currency or nations in Africa and whatnot, where their fiat currencies go through peaks and valleys and you lose money quickly relative to the US dollar, like little things like that. Could I one day, 15, 20 years from now, say, I don't use US dollars, I use Ether, I use Cardano, I use Bitcoin?
It's also
like that could happen?
It's also like, is the U.S. still made of 50 states in 20 years?
Yeah, exactly.
Years?
This
Are
is
we
seriously.
Are we going to be able to use our voice as exit and opt in into what nation states we want to be living in or be guided by? I think there's a lot of potential things out there in terms of like self-sovereignty too, and how you view things. And like with Bitcoin right now, like this is a store of value, it's a hedge against inflation, but it's supposed to be gold 2.0. At least I view that. And then I think that I don't technically view it as a cryptocurrency. Like in this deck, I use the word crypto asset. I think that there are going to be other types of currencies out there. And I think that there are a lot of stakeholders in the ecosystem that are frankly scared because when you have countries talk about building their own stable coin pegged to their dollar, and then you also talk about banks are coming out with their own coin, there's JP coin. But there are a lot of different currencies and tokens out there that are being developed by the day with a lot of different use cases. And while the USD is the global reserve currency, it's losing a battle every single day. And you see negative interest rates in Europe. People are still putting their money in the bank, and they're losing money while also getting charged for them to keep their money. And so they're looking for other places to put it. And why not participate in some DeFi tokens where you could actually you could earn rewards just by participating and holding your tokens. Why not do that? And so where everything's going to go, my bet is that decentralized finance is going to be the ride sharing to the traditional financial systems medallion, the taxi medallion. And I think that's where we're going to be heading. So I loved your comments and your insights, and I think we're aligned in a lot of different ways, a lot of the same ways.
Thanks.
Awesome. I know we're at time, but there are a few more questions. Harry, do you mind staying? We have 2 more questions in queue. Are you able to stay for a couple more questions?
I can stay for one more. I gotta make sure I get upstairs. I got a little kid that's screaming. I can hear him 2 floors down.
All right. Hey, Ben, since you had the chance to ask a question, you mind if we go with John's question?
Any questions? A good question.
All right.
Hey,
Thank you, John.
Harry, thank you for the presentation. I really enjoyed it, and I appreciate your insight. I had a quick question about NFTs. I'm still trying to figure it out, and I read about it every day, and I'm just pounding my head, so I'm hoping you can shed some clarity. If you go to Top Shots, for instance, and I want to buy a NFT from Steph Curry hitting a 3-pointer with 3 seconds to go in Game 6 of the NBA championship, for instance, and I pay $50,000, why couldn't I obtain that same image and lock it into a blockchain on my own through YouTube, pay absolutely nothing, and still own, in my own way, still own that image, lock it in as much as I can on my own via just traditional means? I guess I'm confused, because one of the things that I heard Beeple say after he sold his artwork for $70 million, he said that NFTs are still subject to copyright laws. So that if someone makes an investment in an image that's locked into a blockchain, copyright issues still hold the day. So I'm confused as to the actual value. I understand I used to collect cards as a kid and I get all the collectibles, but it doesn't make sense to me as to the intrinsic long-term values in NFT if, in fact, after you make the purchase, you're still subject to intellectual property and copyright laws. Can you shed some light on that, please?
Yeah, and I'm right there with you, John. I think for a lot of us, well, just me especially, like, I'm trying to get my head around this and figure it out. But at the same time, I was one of the first people to buy CryptoKitties. And it was kind of like, why would people be buying CryptoKitties? Like, I wasn't even into Magic cards. And like, I played Pogs with the smart kids who are playing Magic cards. And but I bought CryptoKitty, which is made by the same group, Dapper Labs, which is based in Canada.
Right.
They were betting on people would be trading these, and also if you create scarcity in products, and that value will go up. But also if you could show the provenance of who created this, who is owning it, and you could also share it, keep it online, and essentially trade it whenever to whoever is the highest bidder, instead of holding on to like a physical CryptoKitty or a piece of art that just sits on the floor in your room and it's not available to be traded or auctioned on a marketplace 24/7 like it would be now, like my CryptoKitty now. And now you're moving forward with Top Shot and what's going on, and you see traditional works of art such as paintings. They're valuable because they're one of a kind, right. But also digital files can also be endlessly duplicated. So what makes these so special is, I think it also depends on who is selling them. And so I think Top Shot and their partnership with NBA, these are copyrighted moments that they are selling. And so, and also you could also trace back, they have royalties that come back to these too. So there is a business model that is wrapped around this, but also the strong brand too that issues these NFTs as well. And so I think that naturally brings traffic and users into the ecosystem. But also I think people are starting to see the value in this instead of just trading like Honus Wagner cards like from the previous generations did.
Right.
Yeah, and
I
I don't know if that makes sense
I-
what I said. I'm watching this real time, and it's hard to make sense of it for me right now. But yeah, I just think it's interesting, super interesting, but also the who you buy this from, the NFT from, they potentially are also paying to store this for you too. And because if you just buy this from any old Joe off the internet, they can just shut down their website, shut down their server, or wherever they're holding that JPEG, as you said.
Great point. That's a great point.
Gone poof. And so I think there's a lot of value. It depends on who you're buying it from.
Well, thank you very much. I've been struggling with it. Like I said, I've been reading hours a day on it, and it's difficult for me to figure out. But your words helped a lot, so thank you.
Oh, thank you, John.
Awesome. Well, I know it's about 10 o'clock your time there, Harry, and really appreciate the time you staying on late. So this meeting will be recorded, or this has been recorded. We're going to do some processing with the video and we'll send that out. I know there was a question about Harry's Twitter. I had posted that in the chat. So for those that want it, you can pick that up. And, again, Harry, thank you so much for your knowledge and expertise, man. And really looking forward to seeing you continue to make an impact at Bitcoin. And, thank you so much for sharing. Community, I hope you found some good interest from this meeting today, and leverage Bitcoin or leverage Coinbase and buy some Coinbase or buy some Bitcoin.
And if your enterprise is interested in learning more about what we're doing and the infrastructure that we have, and we can be helpful to you all, we'll love to share too. And so you have the information, or go through Claude. Thank you so much for everyone being here tonight. I really enjoyed this, and looking forward to continuing the conversation. Thank you, Claude,
Awesome.
and everyone.
All right.
Thanks, guys.
Thank you, everyone. Thanks, community. All right.
Thank you. Bye-bye.
All right. Bye.